Oh, well, good evening, ladies and gentlemen, and thank you for being with me this evening. And it's good morning to our friends on the east coast of Australia. Good afternoon to you Kiwis across the ditch, our great friends and cousins. So how's the volume, guys? Would somebody kindly just type in the question box that you can hear me all right? Here we are. Mark, of course. Mark L. Wonderful. You got us trading yet, Mark, or you're still fielding new job offers? Wonderful. And we've got John with us as well. Thank you for being with us, folks. Okay, so that's wonderful. We've got all our usual friends here. Good to have you with us. Gig's with us, I know. And some of them come in a little bit late, don't they? Anthony D's with us. He's a broker. George T's with us. Thank you. Greg from, are you from Colorado Springs or Texas these days, Greg? I know you're in the process of one or the other, and of course that's grand. Jay's with us. Mario's with us. Mario's a new tutorial guy. He lives in California. Great to have you with us. Mario, we had a good session, didn't we? Anyway, that's good. Let's move on. And we've got Miles with us. That's good. Milton, wonderful, Milton, to have you with us. Thank you. Norbert from the really cold country up in North Canada. Peter, plenty of Peters. Peter Mack, who's not a day trader. Plenty of others. Pietro, wonderful to have you with us. Thank you. Richard, we haven't seen you for a long time, Richard. I'm glad to have you here today. Rodney's with us. Sean's with us. Steve's with us. Many Steves are with us. Michael, lots of people coming in now. Okay, wonderful. Sounds good. Thank you, Mario. And of course, Vicky. We don't have many ladies, so we do like to make a special welcome to them when we have them. And Vicky's a real Danielcode stalwart. Okay, so I chose this messy Gann chart for our banner for today because, as you'll see, once you start tracking time cycles and forecasting, you finish up with a lot of lines on your chart. Too many. And the charts I'm going to show you today are my own. And I've cleaned them up as much as I can, but you do finish up just like Gann did here with an awful lot of stuff on your chart. Okay, so we'll move on here and see what did we see. You know, of course, that the Danielcode market, we say with Danielcode, are rational, orderly, and sometimes predictable. And you should know all of that by now. So this is a special presentation for Gaurav today. Gaurav's doing a tutorial in London, and he did it some time ago, but he's still working his way through new things. And he particularly wanted to know about the fourth seal method of forecasting time. And I put up the Euro USD chart here for a couple of reasons. First of all, it's Gaurav loves trading. It's one of his favorite markets. But more importantly, look at today's bar. Great big bar down. Look where it ends. Once volatility comes into markets, which, you know, we always pray for volatility. It's what just puts the spice on top. But have a look where this bar ended today. The blue line, 107625, just about perfect. I haven't actually got that chart up, but close enough for what they say, good enough for government business. In other words, almost perfect. Wonderful. And we had a whole lot of that today with the way that these Danielcode price targets, which actually are time cycles, as you know if you've been with us for a while, the way they stop markets and cause markets to turn is absolutely fantastic, and it's a wonderful thing. And you're going to see a whole lot more of that today. So today we're going to talk about the fourth seal, how it came about, where I got it from, and the process of finding it, as you will. And I wanted to give some credit to W.D. Gann, who was a great name in the brokerage and trading business. And I was a Gann fan for years and years. In fact, I started trading futures when a friend of mine introduced me to a chap in Sydney, Safety in the Market, Harry Bowden, who was teaching his interpretation of Gann. And of course, all of the people, there's a lot of people who teach Gann. It's very, very interesting that so many people have locked onto it. And of course, we have clients who absolutely adore Gann, so I dare not say anything derogatory, or I'll upset a couple of very, very good clients. But I was a Gann fan for a long time, maybe 10, possibly even 12 years. And I had all of his books, all of his various courses, the egg course and this course and that course. He was just a massive producer of written material, and quite brilliant. And the two people that we're going to talk about today are Gann and the Astral Tramp, who was a English gentleman, whose pseudonym was Sepharial. And both Gann and Sepharial, you have to acknowledge they're quite brilliant men. The amount of product they put out back in an era where there was no IT and it was all handwritten and hand-typed, most of it. It's quite incredible that the stuff they produced, if you simply Google W.D. Gann and then Sepharial, just have a look at the number of books they produced. I mean, it's just massive. In Gann's case, more than the books were his courses, which were huge. Took a whole lot of space. In fact, when I finally divorced myself from Gann, I actually had to rent another garage just to store all of the paraphernalia I had. And I was into Gann in a huge way. I had a lady in San Francisco and another one in London buying me all these wonderful Sepharial letters and so-called original Gann charts. I don't know if they're original or not, but it's at the very least, it's a hugely stimulating intellectual exercise. Gann is owed a huge debt for what he did, and really what he did and what he should be remembered for is that he taught brokers first time that if you educate your clients, they're going to enjoy their trading more and they're going to trade more, which to a broker, that's, manna from heaven. He is just a prolific writer. And it started me off, some of the stuff that I came across in my study of Gann led to other things which were pretty good. Gann's great love was Freemasonry, and he was awarded a 33rd degree of Freemasonry of the Old Scottish Rite. And that apparently is an honorary degree awarded for outstanding service to Freemasonry. And that's why you see a lot of Freemasonry or Masonic interpretations in Gann's work. Squares are very important in the Masonic order. Square of 9, square of 12, all sorts of squares. And 33 degrees, of course, is a number on the trine, unusual word you may not have heard of, T-R-I-N-E, and it literally means thirds. So 33 and a third and 66 and 0.6 are the two numbers on the trine. And we don't use the trine on futures analysis, but you'll find a lot of the big stocks, they love finding support and resistance at the trine. Gann leads us to Sepharial. And Sepharial we'll come to in a moment. But he was an extraordinarily brilliant man. It's not that I adopt his stuff. He's been dead a long time now. But the work that he produced, the sheer volume of work, is absolutely massive. And in those circles, he's still regarded very, very highly today. And much of Gann's work is an interpretation of Sepharial's astrological work. He was an astrologist, and it had to be disguised in America because it was prohibited. Astrology and palm reading and soothsaying, there were times during Gann's lifetime when that stuff was illegal to publish. So Gann, with some of his longer, windier rants, really his attempts at interpreting Sepharial's work in a form that was suitable for publication in the US. So Sepharial's real name was Walter Gann Old, and some people say he was a doctor. Wikipedia's just got him as studying medicine at some stage, but he's mainly known for his work as a theosophist or theosophist, is it? That's a very strange word. Basically, it means God's word, quite literally. And the Theosophical Society was in its time a big deal and probably still is today. And one of the founders of it was Madame Blavatsky, who was Sepharial's partner. He lived with her in their later life together. And one of the things with Sepharial that he was famous for or known for was this out-of-body travel, which is a very, very advanced part of theosophy. And she actually was one of the founders, Madame Blavatsky, and it was founded in New York in 1875. And they made the headquarters in Chennai, India. And it's still there today and still covered extensively. So what really was going on in layman's term was astrology, not astronomy, astrology. You know, the interpretation of birth dates and star signs and what have you. And Sepharial, interesting character, because apart from being a massively prolific writer of material, if you just Google Sepharial and have a look at the just sheer volume of number of books that he's produced, it's quite extraordinary. What I found interesting is that later on in his life, he was the turf editor, the turf consultant, means he was a horse racing guy, and he was the turf writer for the Times of London, of all newspapers. And he would take the starting times and the dates. You can actually read about it. It's in the, I think it's in his book, The Silver Key. I've read them all, but I don't remember them all in that sort of detail. But I think it was The Silver Key. And he'd take the starting time of the race, and he was also a numerologist. Take the horses' numbers so they get luckier and less lucky as time moves on and what have you. But one of the things I found really interesting is that in his mathematical work of all of these star signs and the movements in the heavens, he often found situations where something seemed statistically correct and factual, but you couldn't find the anchor for it. And we have some of that going on, which I'm going to show you today. And the way that Sepharial dealt with it is he opined that there was a hidden force in the universe, which undoubtedly there is. But this particular one that he was referring to, he called Lilith, and said that was a black moon. You couldn't see it, but it was there. And that's how he solved some of those problems in his own mind about where these various movements and lines of astrology were anchored. Okay, so this is one of his books. You can see he's obviously still considered to be an authority on that particular branch of his interest. And just have a look at the number of books he published. I mean, it's amazing. Sepharial also, of course, is the force behind the two Mississippi floods. You remember that Gann was very excited about his trading in cotton and this particular year, it just escapes me wherever it was, but Sepharial wrote a letter to Gann predicting there would be 2 floods in the Mississippi that year instead of the normal one, and that played havoc with the cotton market, which Gann was trading. Wonderful stuff. So here we are. So the 4th seal is an angle. So if you think about your chart, the 1st degree, or we call them a seal, you can call them the degree if you like. So the 1st degree or seal is price. The 2nd degree or seal is time. The 3rd degree or seal is volume. Now, we don't use volume in our analysis anymore. We used to, but there's so many dark exchanges, private exchanges for the big firms where they can match orders and what have you, that the volume has now become much less meaningful than it used to be, because we don't really know what the true volume figures are, and we don't always get them in a timely manner either. But the 4th seal, so that's the 3rd degree or seal, and the 4th degree or seal is an angle, but it's a special angle. And it's an angle that finds the colored bars, which are red for inside bars and grey for outside bars. And the 4th degree or the 4th seal will find the open or high or low or close of the colored bars. And that's the definition of what makes it a 4th seal angle. The 5th degree or seal is an angle that finds swing highs and swing lows. In other words, it's running from known starting points through that fluctuation in the market that gives you a swing high or a swing low. If you think of the market as a giant pool of energy, then you'll understand why inside bars and outside bars occur, because they are really an expression of what the market's doing. And all markets have their own time frame. And when you get into it far enough, you'll finish up being disappointed, because the answer is it's terribly, terribly illogical, and it changes constantly, market speed. But basically the market, every market has its own time cycle. And when it thinks it's got ahead of itself in time, it will create inside bars, because inside bars, a bit like running on the spot, there's action, but there's no momentum. And the converse of that is what the market does when it thinks it's behind its own time. It will create an outside bar, which is really 1.5 days or 2 days lumped into one bar. So they're the differences between the 4th degree and the 5th degree. So the colored bars, which we treat as null or void for trading purposes, but they're very important in forecasting, because they are interruptions in the data or energy, and they're signposts to future time and price movements. So every angle, anytime you draw an angle on a chart, it has properties of both time and price. And we find that very important for this particular method of forecasting. Now, there are many methods of forecasting. You don't necessarily have to get bogged down in one. I did, and it took me years and years before I saw the way to utilize it and benefit from it. But it's quite extraordinary when you get into it. But let's start with what prompted me on that search. I read when I was a Gann fan, that Gann stated that a line drawn from the low before the low through the first reaction will forecast the high. Well, that's excuse me, one of those wonderful Gann statements for which he's famous, which are very exciting but totally ambiguous. I mean, what is the low before the low? What is the 4th reaction? And is it the same applies? The corollary work is that there a high before the high? That if you drew a line from that down through the first reaction, would that forecast the low? And what exactly is the first reaction? he's talking about a counter trend, and sometimes that can be anything from 1 bar to a very complex reaction of 10, 11, 12 bars or more. And what exact part of that first reaction is our forecasting line going to? Is it the high or the low of this first reaction, or is it another part altogether? Well, that's often what happens with Gann. He comes out with wonderful statements that really grab your attention, but then you've got to work out what he means. And I never worked out what he means. I still don't know to this day. But it did spur me on a search. I got so interested in that particular item that I spent a very long time looking at all of these relationships between markets, which I'm going to show you today. So what we have here, this is a chart of gold, and it's an old piece of the chart for a reason that you will soon become familiar with. And we can see we've got our main low. This is a 12-day chart, so every bar here is made up of 12 trading days. And we can see our low came in November 2008. And if you just look from there, you'll see the various lows that happened before that low. And I've numbered them 1, 2, 3, 4, 5, and 6. The next one after that is broken through the support line that I placed at the main low in November 2008. And once it's broken through that line, it's no longer a low before the low. It then becomes a low after the high. And you may think that the nomenclature is a bit strained, but that's how it works. So this is what started me off on this search, which took me years and years and years, and which I still, what I've learnt about the fourth seal and the fifth seal is of such interest. I'm still actively involved in that research today now. I should be amiss if I didn't mention to you that way back in 2011, a young man, Frank DB, came to one of my webinars, which was in Taupo in the beautiful, beautiful land of the long white cloud. That's New Zealand. He came there with his fiancée, Anne. He's a young man. And they're now married and got a family and some lovely children. And he said to me, I've never seen a financial chart. I've never read a financial article, but I like your writing so much. I used to write quite extensively for Financial Sense and Forex Journal back in those days. He said, I like your writing so much. I'd like you to teach me how to trade. Well, over the years, Frank has become a deep expert on the fourth seal. And in fact, he writes the commentary for us under the fourth seal for gold, crude oil, and the S&P. And he keeps the charts, which is a labor of love, because once you identify the pressure points at which these various swing cycles are going to bite, you'll see they go on. They repeat and repeat and repeat. Now, I've been talking a lot to you this year about the Danielcode method of finding time cycles that forecast market turns. That's one method and outstanding method of determining time turns. This is an alternate. This is a much older method. This is, at least was spurred, my interest in it was spurred by Gann's statement, although that took me nowhere. But you'll see yourself, there's some really interesting stuff to be learned about understanding the fourth seal. So that's what a low before the low means. Right here we're looking at is a high before the high. Now, you're going to look at that and say, well, it's not a high. Well, it is. To be a high in the Danielcode nomenclature, it simply needs a lower bar either side. And the bar before it is the low. That's easy to understand. But the next bar is an outside bar. That's why it's in red. But we always interpret the time cycles as a way positive, in a positive view, to give us the trade, not to look negatively and say, oh, this isn't exactly what I want, I'm not going to trade. Trading is the business. You need to be in the market to make the money. And we would say that inside bar has three characteristics. All markets have these characteristics. And we can call that a down bar because to be called a down bar, it has to have any one of the following. Either a lower high than the previous bar, which it has, or a lower low than the previous bar, which it does not have, or a close less than the open, which it does have. So we can classify that red line immediately after the bar that has the arrow on it as a down bar, and that makes that a swing high. And in fact, that's the high before the high. And you can see that I put a horizontal line on the bar that made the high in October. And you can see that the two previous highs before that, which come just before the September 2011, what was then the all-time high, they both breached that line. So I don't classify them as highs before the high. Okay, let's move on. So what I've just been talking to you about is counting swings. So this might clarify it more. Swing high has a lower bar on both sides. The bar needs any one of these to be a swing high. A lower high than the previous bar, or a lower low than the previous bar, or the close is less than the open. And any one of those three qualities denotes a down bar, which is how we can nominate the bar immediately before the inside bar as a high before the high. So this is literally how the search began. I worked out at that stage that Gann's comments were really interesting, but they weren't giving me sufficient detail to go anywhere. So I started on my own search, which took years and years and years. And it's a very simple proposition. If you look at charts long enough, everything is there. The way we trade and our belief is entirely different to the vast majority of traders who rely on all sorts of statistics and reports and this, that, and the other. I mean, the poor old fellas who trade options, they drive themselves absolutely mad with all this extraneous extra data that is produced for them by the big brokers and the big trading, the Goldman Sachs, the JP Morgan, etc., and for huge money. So we don't do that. Our belief is that everything, it's called the efficient market hypothesis. Our belief is that all knowledge is known by the market, and that makes the market at all times perfect, which might be a bit of an extension. But have a look at this. This is a line, same chart, that starts at the closing high. It's valid to start your fourth seal count at either the closing high or the swing high. In the same way, it's valid to use either the closing low or the swing low. So this is a line that starts at the closing high, and it has to go through one of the open or the close or the high or the low of a colored bar. And the colored bars are inside bars and outside bars. And as I've said, both of those structures result from an interruption in the data flow, or an interruption in the energy flow, if you prefer. So you can see this line that starts from a closing high. It goes through the open of a red line 3 bars later, 1, 2, 3 bars later. I don't like to have the numbers close to each other for the same old adage as building a fence. If you happen to be a fence builder and you're out in the paddock and you've been told to build a fence that's going to be 2 miles long, you're in Queensland, Australia or maybe the Northern Territory, where properties are huge. Some of them are bigger than some kind of whole countries in the world. So if you're going to build a fence that's going to be a mile long, let us say, you put in your corner post in the right place, and then you put in a sighting peg. But if that sighting peg's only a couple of feet away from the corner post, you're going to lose the line. It just doesn't work. You need to put that sighting peg a fair distance away so that you can then follow the line of what the fence is going to be visually. You can follow its line, literally a sighting line. The same thing happens with the fourth seal and fifth seal angles. I don't like to have them so close together. This one is a bit close together. It's fairly precarious, but I'm showing it to you for historical reasons. This is the first time I did this exercise, and this is what I found. So I had here what I call a fourth seal line. It went from a swing high, and it could have gone from either the closing high, which it did in this case, or the swing high, through the open or the high or the low or the close of a coloured bar. And I'll repeat, the coloured bars are red are the inside bars and grey are the outside bars. And they're called that. An inside bar has a high and a low both inside the range of the previous day. An outside bar has its high and low outside the range of the previous day. So quite straightforward. So let me interrupt here to tell you, if you're interested in learning this stuff that I've been teaching you for years, and particularly these time cycles, which are absolutely dynamite, let me know. Write to me, jneedham at thedanielcode.com, jneedham at thedanielcode.com. And the special offer for this webinar is that if you are one of the, and I can take 3 new clients, if you're one of those 3, first in, best dressed, I will add to your package the creating and knowing Danielcode time cycles. That's going to retail for $4,500, but it's free for you if you are in the first 3 people to take the full Danielcode tutorial before 31st May right now happening. So jump on your email, send me an email, jneedham at thedanielcode.com, and reserve your spot. Any questions you have, let me know. Happy to answer them or call you and talk to you if that is what you would prefer. Okay, so let's move on with this stuff. This is the next thing I learned, and this is a line that's slightly different. This line goes from a low before the low, and you can see as we looked at the last chart, there's not just one low before the low, there can be many lows before the low. This is in fact the low before the low that was numbered 1. It's the first one. It doesn't have to be the first one, it can be any of them. But this particular line I've drawn on here goes from a low before the low to a swing high. And the swing highs themselves, and swing lows of course, are also interruptions in the data, because you have a movement one way that stops and reverses, and that's what creates swing highs and swing lows. These are very minor swing points, but they're very revealing. So this line here is the start of what we would call the fifth seal. It runs from a low before the low or a high before the high, and itself it runs through a swing high or a swing low. Very straightforward. Look what happens as this moves along. Here it is. Here we are. This is the fifth seal, the first one created. Look what happens when you extend it. And I mean, it's staggering. We're talking about data that started in mid-2008. The next point was the swing high in very late 2009, and it forecast what was then the all-time high in gold in September 2011. How is that possible over that period of time? Now, I actually had this chart all that time, I have to tell you, it never crossed my mind until very late in the piece that that's where the high was going to come in. So that's what some of this forecasting can do for you. It's quite sensational, and this is probably one of the most sensational fifth seal lines that have ever been, and it's very, very exciting stuff if you happen to be trading gold, which we were. In fact, when that high came in September 2011, I was actually running a tutorial, a live tutorial in Tramp, New Zealand, where I lived for 12 years. Wonderful, wonderful place. A beautiful country, New Zealand, folks. If you ever get a chance, don't miss it. Get there. You won't want to leave, I promise you. So I was running a tutorial at the time, and we're talking about gold and beginning to talk about the fourth seal. And this may have been the first time I ever taught the fourth seal. And one of the gentlemen said to me, is that it? Is that the high? And I said, well, I don't know if it's the all-time high. It's certainly the all-time high now, and it's going to be the all-time high for quite a while at least. So this guy, Jeff, his name was, jumped up and left the tutorial. And I didn't see him again until that evening when we finish teaching. We go somewhere and have a glass of something cold. And I said, you left in a real hurry. Were you sick? Something wrong? Oh, no, he said. I had to get hold of my gold bullion dealer, who, and of course, in the middle of the night in Pennsylvania, I think it was. Anyway, it took him hours and hours. Eventually, got hold of his bullion dealer, and I said, "What do you need?" He said, "I've sold all my gold, all our physical gold." He said, "I've sold it." So I thought, crikey, I hope I'm right about this being the high for a while. It turned out it was. But that was just such an amazing thing to see how accurately that high came in against that number. I mean, it's at that number plus or minus a handful of ticks. Quite extraordinary. So that's the fourth seal and the fifth seal. Now, let's have a look at the charts become messy. There are two particular purposes and requirements of the fourth and fifth seal. You can start here at the left of this chart where it says September 09, 2011. And there's a swing high before that high. In other words, that's the high before the high. And there are many, but that's the first one you would notice. And if you look at that particular line, it runs down and it goes through. Let's have a look. It's hard to see with. Oh, very close to it. 1, 2, 3, 4 bars later. Now remember, this is a monthly chart. Why are we looking at monthly charts? Normally we use 24-day charts. Sometimes I just like to see what's happening on monthlies and weeklies because that's what the rest of the world sees. So occasionally you'll see these charts will switch from 24 trading days, which is a Danielcode chart, to a plain old-fashioned monthly chart. But it shows you the same thing. From that start of that, the high before the high, 1, 2, 3, 4 bars later, it hit the low, and that's the low of the big outside bar on its way down from September 2011. So you've got a bar that's gone from the high before the high, and it's gone through a swing low that makes it a fifth seal line. Look what it does. All the way down, eventually, it gives you another support there, and part of that support will be the fourth seal line that takes you right to the low if you follow that through with your eyes. The other purpose for this sort of analysis is that once we can say that we have a validated bar, by which I mean you to understand that it's either a swing high that was part of a fourth or fifth seal line, or it's the other part of the fourth or fifth seal line, either an inside bar or an outside bar or a swing high or swing low. Once it reaches those criteria, I call it a validated swing, and validated swings become valid points to start your time counts. Now, this is gold, so we know that the dominant cycle for gold is 44. If you didn't know that, go to the Danielcode website and look for an article there under the Articles tab that I wrote, I think, way back in 2009, and it's called Masterclass 2 Timing Gold, and you'll see how we get to the number of 44 as one of the dominant ratios and cycles of time in COMEX gold and physical gold as well. So look what happens as a result of that. When you look at those time cycles, it gives you the first 44 cycle gives you a high, and you had a sell signal at that high. The next one, which is 55, that's time and a half. 44 and a half gives you the low of this whole move. And then the next one, 66, which is the trine. Remember that? 33 and 66 is the trine. That gives you that big outside bar down, one bar before the eventual low. Moving along to 88, they gave you the next significant low, and then it switched to the big rally up. 99 gave you the first high in that rally. 110 gave you one bar before the ultimate high, which was August 2020. But the bar that it's highlighted, you'll see, is the closing high, which is very important. That's the bar you wanted to get out on. And of course, it found that exactly on its 44 cycle. And then it moved along. You'll see there's another blue arrow there. That's the next high. And then you have an extension or a Danielcode, a fourth seal line that runs from the swing high through what am I looking at? Must be a swing low, because that would make it a fifth seal line. Yep, I think that's what it is. Hard to remember all these things, but a pretty nice piece of knowledge to add to your trading. So here is still working in gold, and this is again a monthly chart. You can see how the low identified by the fourth seal line, if you start on the left of the chart just before the high in September 2011, you can see that there's a very subtle swing high in there. Everything about time cycles, and these are time cycles, is about subtlety. Nothing's ever really obvious, and that is because it's become a swing high by reason it has a lower bar before it and had an inside bar after it, but that inside bar has a lower low and it has a close less than the open. Either one of those would allow us to classify that as a down-facing bar, which would create the swing high for the bar immediately preceding it. You see, have a look at this as it goes along, and we get a valid bar there that's got the black arrow on it, and that means we can use that bar to start our time cycle count. And I showed you the previous one. This is a slightly different one, same chart, but look what we've got now. We've got all the highs worth having, and we've got the bar before the closing high, before the ultimate high, and of course the next swing high, and there's a swing high, there's a Danielcode, a fourth seal I should say, number on the previous bar to the current bar, and that could well turn out to be an important turning point. Okay, this is Euro USD. I want to show you that stuff works exactly the same on all charts. The Forex guys, and I started off as a Forex guy, always want to try and tell you that Forex trading is different and Forex markets are different. And that's why they call a tick, they call it a pip instead of a tick, to try and make the point that they think they're different. In reality, they're not. It's just another chart, another market. Forex trades exactly the same as futures on the Danielcode lexicon of signals, and see what's happened here. Look at these fourth and fifth seal lines, just giving us those highs so precisely, which of course are cell signals themselves. The lows down the bottom, we didn't get every one of the cell signals. There's one there that it didn't give us, and after it started bottoming, the two little rallies came on different time cycles, which are not shown on this chart, so I haven't put the cell orders on them. But have a look at the signals that are being created where the market has its fourth or fifth seal angle intersecting with the price chart, and how amazing these cycles are. And this, what we're running on here now, it looks, you can see the 35, that's actually half of 70. Why am I using 70? 70s are well known, it's always been a Danielcode time cycle, but it comes from a different part of the historical manuscript to where the Danielcode numbers come from. But it's certainly amazing to see the 70, as I've told you various times. It has particular affinity with anything European. Have a look at German bunds. They just about live and die by the 70 cycle, and half, of course, is 35. So this is Euro USD on a 24-day chart. That's our normal long-term chart. And you can see it just spinning around like clockwork on these fourth and fifth seal lines. Just have to go through really, really slowly, go around when you get onto this. Put these numbers on your charts. Any of you that have done a tutorial, put these numbers on a chart, your own chart. Look at them and think about them. Why does the market do this? The market is just so mathematically refined that these angles go on ruling the market all the time, and they go on for years and years and years. This is the same chart, but this is the monthly chart, so it looks quite different. Really, it's the same thing, and I haven't put on the buy down here, which you can see obviously is where we get the conjunction. That's the swing low that we use from the high before the high as we worked our way through it. And it does look like a total disaster. It looks like a spider's nest, doesn't it? One of the ways you can overcome that is, instead of having all of the lines on as I do historically, you can simply find each item that is a high or a low pro tem, meaning at the moment, and ask, is this a fourth seal angle? Is this a fifth seal angle? If it is, it becomes more important because it's then a validated time cycle for starting your timing modules on. Quite amazing. I should move on fairly quickly, folks, because time is running away. And this is Euro USD on the 12-day chart. Same thing, highs and lows, buys and sells. It does give you some new sells and some new buys and insights that you don't have otherwise. So the expression "all knowledge is good" is really worthwhile. So this is the S&P E-mini, which we love trading. Have a look at some of these fourth and fifth seal, finding the outliers. I mean, there didn't seem any reason in the world why this high should be here. But once you see the fourth and fifth seal intersections there, it had to go there in the same way as the way this market just run down 1, 2, 3, 4, 5 different bars, all holding that support. And over here, the same thing. And I think that that's the one. No, that's not. There's another one. It's this turkey back here, this great big outside bar, the key reversal bar. And that happens to be on October the 13th, 2022. It was a Thursday. There was an options, huge OPEX options expiry. And that bar went a bit further than I had it going. It should have turned a little bit earlier. When I say should have, Markets do what they want to do. They don't really care what I think they should or shouldn't have done. But have a look at this next chart. You can see with the three little blue ellipses I put on it that there's absolute straight line, 1, 2, 3 lows, absolute straight line between them all. But where's it anchored? You can't find where it starts. This is a Sepharial Lilith, the dark moon. There's obviously a dark moon way out there in the ether to the left that started this line. It's pretty extraordinary the way some of these things just jump up. And it's not something normally you would inquire about, but there it is. And that's Sepharial's answer to that, at least, is that there is this hidden astral body, Lilith, the dark moon, and it's black, so you can't see it. Here's the S&P on a 12-day chart. And what we're looking at are these very, very important reactions in September 2018 and March 2020, which themselves then led up to the all-time high in January 2022. Have a look at these basic four seal lines and what they do. And I wonder if I can just show you here, maybe not, but both of the lows on those very, very important counter trends from September 18 and March 2020, which of course was the COVID flash crash, they came pretty much, their support at the bottom of them, which are the two numbers that the time ratios gave us, for those of you who follow our earlier webinars, absolutely perfectly on their Danielcode, forgive me, on their fourth and fifth seal ratios. One of them is a fourth seal, the next one is a fifth seal. And perfectly perfect. Look at the low in October 2022. See if I can move this on. No, what I'm doing here is showing you the various selected points that became valid for us to start our counts from. That's what I've got there. I think there was something I was trying to show you on the previous one. It's that low which still bothers me, the October 13th, 2022, still bothers me. I had that low coming in 2 bars earlier. Anyway, it did what it did, but you can see that where we have the time cycles, we start the time cycles, and where they end is where we can start the next time cycle. So what I put on here is our normal Danielcode time cycle tool, which if you subscribe to the Danielcode Pro service, you'll have that time cycle tool, or you can create a much more extensive one. The vast majority of time cycles are 44, 59, 62 and 70, which is displayed on this time cycle here. So have a look how accurately, this is the time cycle back here. Look, here's your 44, finds this low here, 1 bar after the low. Then you get along here, you find the high in January 2022 on the 70 cycle. Wonderful. Okay, let's move the next one. These are the areas. I put a red diamond on to show you the spots from which you can start using counting methods. You can start at any of those. They are validated swing highs or swing lows, and you can start your time count from any of them. I think that's probably getting towards the end of it, folks. I hope I've been able to explain that to you well. It can get very complex, but always remember that how wonderful all of those time cycles are. This is what makes the money, trading daily bars and big volatility. But look how it's just enhanced the accuracy of the Danielcode price in blue here, which in fact is based on Danielcode time cycle. We just treat it as a price and put it on. The market happily follows it all the time. It's quite extraordinary. And you can, I'm not going to bother telling you what these numbers were, which I usually do. You guys can do it for yourself. Just check out how amazingly accurate these cycles are. So this was CAD Chief, and have a look at that close. That close is 6704. Where's our blue line? 6703. 1 tick variance, and about 3 ticks at the high. That came at the close, which was foreshadowed by the previous bar. So it was resistant for the high for the previous bar, and locked on completely at the close, as they do. Here's the next one. Same thing. This is cable, GBP USD. They call it cable. Look, big volatile bar today, but look where it stopped. Exactly at the red line at 123.90. Exactly. And this is the US dollar index, which is having a party, real party. And the volatility is extraordinary. But look how accurately it's following its Danielcode ratios. 103,400 was the blue line there. What happened here to be of great interest to us? Let's have a look. That high today, 103,490. That was the actual high, 103,490. Can you see the blue line? 103,490. Interesting stuff, isn't it, folks? Pretty deadly. Yeah, it sure is. And in fact, if you do nothing else except use target recognition from the members charts as your final filter for any trade, you will increase and improve your trading immensely. Here's the same thing. This is the E-mini. It's having a big blast of volatility as the NASDAQ in particular has taken off and going higher. Interestingly, though, is the fact that if you look at the T-bonds chart, it's going down. And as I've told you before, the chart is the opposite of the interest component. So bar going down means interest rates going up. And there's been this fight on for a long time between the optimistic market and the Fed, who are trying to tighten up business conditions, amongst other things. And it's interesting that you've seen two complete alternates today. You've seen big, massive bar down in bonds, which gets the Fed. That's now the Fed winning the battle. But on the indices, the ever-optimistic punters are winning the battle. We'll see who survives at the end of it all. But needless to say, we're long and happy, and big bar up there, closed for the day at 421.550. 421.550 was the high, the close I should say, 421.550. Blue line is at 421.450, just 4 ticks of variance against target. Okay, same thing here. This is the Russell 2000. It just bumped its head into the red line, didn't it? Pretty innocuous, but pretty deadly. The high today is 1794.4. Where's your red line? 1795.2. 8 ticks variance. That's it. Wonderful, isn't it? Okay, so remember that the business of trading futures and Forex is not to be right. The business of trading is making money. And lots of these things are interesting, but that I show you, but they're all designed to improve your knowledge of markets, improve your profitability. Lots of money makes happy traders. If you haven't already, folks, do take advantage of the free trial at the Danielcode. Just go to the website and click on the free trial link. If you've already had a trial historically, the program will probably remember you and won't want to give you another free trial. If that's the case, contact Terry at support@thedanielcode.com and he will be happy to facilitate things for you. Finally, This is our disclaimer, which I do urge you to pay attention to and be serious about. It's very, very easy to lose money trading if you don't know what you're doing. And remember that these are geared instruments that we're trading, and you can lose a lot of money very quickly if you don't know what you're doing. So make sure you understand your trading and you are more than competent before you risk any real money. If you're interested in any of this stuff, folks, do let me know. I'll be happy to teach you so you can do it for yourselves. But otherwise, that's us for the moment. And I've got a great big long post here from Akshay. Let me read it. Yeah, Akshay, engrossing webinar. Having been a practicing Freemason earlier, the square and the compass are often used in the workings of a Freemason. The compass is full of degrees, which is also what angles are made of. Very interesting. Look forward to further webinars. He likes this. Keep up the super work. Degrees, wonderful things. Those of you who've been doing a tutorial, substitute the word days, substitute the word degrees for days. What is a day? One rotation of the Earth around its own axis. In other words, the Earth spins 360 degrees. Degrees and days, in some cases, are synonymous. And that's it for today, folks. Do let me know if you have any particular topics you'd like me to run through a webinar for you. Email me, jneedham@thedanielcode.com, jneedham@thedanielcode.com, or if you'd like to learn how to do any of this stuff for yourself, we teach all of it at the Daniel Code tutorial, which you are most welcome to get yourself enrolled in. And apart from that, I've finished for the week, folks, and you've still got a night's trading, or to me a night, for you a day's trading still to go. Enjoy your weekend, and I'll look forward to being with you again soon. Goodbye for now.